Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another updated look at our M1 Finance growth portfolio. As you can see today, well, things are going pretty well, and it's good to see because our growth portfolio has been getting hammered badly. But today, we up 6.08%, which is $72. The past week, we're up 0.03%, basically breaking even. So the past month, we starting to feel a little pain here. We down 12%, negative 168. The past quarter, we're down 6.59%, about $78. And then the past year, all time pretty much, we're down 56.95%, which is negative $853.83. This is brutal. Very brutal. I get it. If you're new to investing and if you got a lot more money than this in your portfolio, well, you are probably feeling the pain if you invested in growth stocks or any of the stocks we have in our portfolio, which we'll dive into in a moment. But it's brutal. And it's crazy to think that we started this portfolio, and by we I mean we, because I did this here on YouTube with y'all. I know it's been a while since I made videos, but don't worry, I'm getting back into the flow of things, and we're gonna be creating consistent content on a weekly, daily basis. So definitely subscribe to the channel if you're new here, and while you're down below, smash that thumbs up button, show a little appreciation. It does help with the YouTube algorithm, and it also lets me know that you guys enjoy and appreciate this content. But man, it's crazy to think we started this back on October 8th with $100, and despite knowing that we are down almost $900, it still kind of feels good looking at this portfolio and being like, you know what, I still got $1,275 to my name in this growth portfolio. That's my money that I worked hard towards, and yeah, I'm down a little bit, right? That's my money right there still too. I can't get it if I wanted to sell right now, but that's still my money. And so the beauty of this is knowing that I don't need this money right now, and I feel like the stocks we have in here will end up doing really well in years to come. Now, that said, I haven't jumped in here recently and I haven't made any changes, which maybe I'll look and be like, you know what, Coinbase, I don't know if I want to allocate such a high percentage of my portfolio to Coinbase. Maybe I keep it, maybe not. But yeah, we're down quite a bit, right? We're down quite a bit of money. And the other aspect of this is the fact that, I know the market, or as some are saying, we're in a recession, or we're just about to get into a recession. If we aren't in a recession yet and we're just about to get into one, then that is even more scary for growth stocks, because I'm sure these are going to be the last investments that people are going to throw their money at, right? They want something more reliable, something that they are feeling confident about being able to withstand a bear market. So this portfolio is getting hammered, especially when you compare it to our dividend portfolio, which, if you haven't already seen our dividend portfolio update, make sure you go and look at that video after this. It's performing much, much better, and it makes sense as to why. Those are all established and reliable companies that are paying out dividends that, some people are probably relying on those dividends for their livelihood at this point. They're literally living off of it. So I get it why that portfolio is performing much better. But just, I want to point out really quickly before we go and look at the stocks and who's performing well. Just when you look at the past day, though, and you can see how high our return is at 6%. Well, you don't see that with our dividend portfolio over the past day or the past week. And the reason is because these growth plays are they're gonna be that much more explosive. So when they do run, when the market does rip, when things do bounce, like truly bounce back, and we start moving again, well, these numbers are it's gonna be high returns just like this. And so it makes it that much more kind of exciting, but worthwhile if you do have good stocks inside of your portfolio. Now, when we look and see, okay, who's performing the best, who's not doing so hot, with our portfolio, ChargePoint is doing the best. We're only down 2%. And then SEMrush, we're only down about 20%. Now, it's crazy to say only at 20%, but compared to how we're doing with everyone else, pretty much, they're kind of in a league of their own, ChargePoint and SEMrush. After that, we have DraftKings down 54%, Nvidia down 58%. And then we have Palantir down about 54% or 58.54%. Then CleanSpark down 63%, followed by Coinbase down 64%, and then Bakkt Holdings down 64% as well. So it's crazy to see how, that the three of these guys, CleanSpark, Coinbase, and Bakkt, are pretty much like at the same metric. And then you have Palantir and Nvidia pretty much at the same metric. DraftKings a little lower than the two of them. And then, ChargePoint and SEMrush doing solid compared to everyone else. Go back and look at previous videos and you pretty much, this kind of aligns with expectations. I'll be honest, I'm surprised Nvidia is down so much, but I'm not, just because they have been such a popular stock and it was like, a safe stock for a bit. So I felt like, that probably was going to get targeted at some point. DraftKings, that was feeling some heat for quite a bit. So I'm not too surprised. SEMrush was someone that I think is a undervalued company that is under the radar. Most people don't know about them yet. They're not like a meme stock company. So, I'm not surprised that they are performing as well. And ChargePoint, if anything, I thought they would have been attacked harder and I would be down more than this. So this is actually surprising to see, because ChargePoint is a fairly, meme kind of popular type stock. In my opinion. So, I feel good about most of these plays in our portfolio right now. The surprising or not so surprising thing is seeing Bakkt at the bottom. That is definitely not surprising. I think Bakkt is probably held up to their kind of expectations and capabilities, in my opinion, the least. So no surprises that they're probably going to be getting hammered the most, especially since crypto is still getting hit fairly hard, which is why you also see Coinbase and CleanSpark at the bottom of our list as well, because they are other crypto heavy based stocks. Now, CleanSpark isn't 100% crypto. A lot of it is energy based, but it's still like reliant on or contingent upon its crypto and mining and whatnot. So it's like, So it's tricky, right? You're going to see anything that's related to crypto on that level probably be at the bottom of your portfolio as long as cryptocurrencies continue, the crypto market continues to get hit, similar to everything else in the stock market and out there. So, as a whole, our portfolio is still getting beat down pretty badly, but it still feels good knowing that, we started this portfolio a year ago. This is our 1 year update pretty much with $100. And despite being down quite a bit, we still have over $1,100 more than what we had when we started this. Now, like I said, we're down quite a bit, but we're not selling now. So even the money that we're down on, I believe we will recover and make much more, because of our willingness to continue to hold and dollar cost average into this portfolio, meaning we consistently invest $25 every week, regardless of how good or bad the market is doing. So if you guys want to grow your money as well, definitely consider subscribing to the channel so you continue to get motivational content to help you on your journey during these crazy difficult times, because I know how tempting it could be to sell, but also, start to invest your money, grow your money as well. So use my link down below. You can start your own M1 Finance account. Invest as little as you would like, $25 a week, invest $50 a week, $100 a week, but just get your money to grow for you. And like I said, despite us being down from, our highs and whatnot, how much money we could have in our portfolio if we were up, we are still up compared to where we were 1 year ago, at least, right? I still got more than what I had a year ago in this particular portfolio, even when the market is performing horribly bad, right? So imagine how well this is going to be going in another few months, right? Another 6 months or another year or 2 years when things are much, much better compared to where they are today. Oh yeah. Oh yeah. And that's when you can reap your rewards for your hard work of continuing to invest and get your money to work for you. But all right, my friend, you already know what it is. I gotta keep it moving. But if you want to see more videos to help you make, manage, and grow your money, consider checking out this video next. Peace.